Good morning. Thanks so much for tuning into the trade setup. There's just so much to digest this morning. It's not funny. Let's get started with what's happening. One, of course, around the world, there's lots that's happening, and the U.S. debt ceiling is something that will be important from a global markets perspective. I'll give you some rationale around that at the end of the trade setup. But remember, oil prices have by and large come off, which should actually augur well from a Indian markets perspective. And we're not seeing too much of an adverse reaction of the Karnataka election verdict on the markets as yet. So that is probably good news. Maybe state elections really don't matter as much from a market's perspective as the national elections would. So I'm kind of leaving that piece out, right? It's a bit of an imponderable, really. US markets had a flattish close in Friday's session. The futures are mildly lower as well. So no big positives from the global markets. The other cues, the 10-year or the dollar index also haven't changed too much. And the SGX Nifty, the last time I checked, was trading flattish, maybe down about 0.25% or thereabouts, which is what the tick was on the SGX Nifty. Yeah, currently to about 0.21% at 18,286. So hardly any changes there. So what's the trade setup there for the day? Leave out, like I said, leave out the Karnataka election verdict impact because we are not seeing that currently, all right? So let's assume there is no impact. So for now, business as usual, maybe at least at the start. During the course of the week is separate. But the Bank Nifty is a likely antidote to a week of weak bias. The bias certainly is weak from an Indian markets perspective. Simply just look at the headwinds, right? There is one that the market's desired outcome hasn't quite come out as yet in the Karnataka election verdict per se. Part one. Part two, the US debt ceiling issues continue. Raw material price pain points for select industries continue as well. And while results are strong, they're not really out of the park, so to say, as yet. And the prediction around FY24 results is not the strongest. So there are multiple things at play which might disrupt the street, and therefore, I use the term antidote, that the strength in the Bank Nifty will likely be an antidote for the markets, wherein the bias could be weak for the current week. The good part is that FIs continuously being net buyers, 12 days now on a trot. They bought about 1,000 crores worth on Friday as well. And this would take the total. I mean, I think the total is already above $2 billion net, but significantly above that, which is actually good news from a flows perspective. Also probably explains why banks are doing what they are doing. And maybe select IT might be doing what they are doing. But quant indicators still indicate weakness. Leverage longs, I think, need to be careful for the week. I may be completely wrong, and I've been wrong now for the past 6-7 days, wherein we're citing caution. But it's not that the market is reacting. Maybe there's a bit of a delayed reaction, but some of the screen was telling me that all was not kosher except the results. I still think that is what the screen is saying, but who knows? I hope the market does better from a bull's perspective, really. But just that the various points that are coming around on the landscape seem to suggest some bit of orange or amber, if you will, if not a complete red. But the stocks and the long list of stocks today which will react is pretty good. More winners than losers, which is actually a good sign. Not those many heavyweights because a large portion of the Nifties come out with the numbers. But be that as it may, the cues are not that bad. So keep in mind, just before I actually get to stocks to watch, just one thing. Since everybody's talking about the Karnataka election verdict and what happens there, right? I don't know about the market impact, really. Can the markets go down? Maybe. Can the market stay stable? Maybe. Who knows? The market may actually like this verdict as well. My limited point is what could happen is what some strategy notes are saying is that it is a good time to go long on staples simply because you would now expect that there would be some populist measures during the course of the year which appeases the rural household in addition to the spending that is already being done on the highways, but direct benefits, if you will, and that might help the FMCG space. It's not an expensive pocket. Margins might also be in favor as raw material costs come off, at least for that bucket. And therefore, it's an interesting strategy to consider. Now, that aside, maybe two-wheelers too, but that aside, stocks that will react today. Tata Motors, extremely buoyant performance in Q4. Revenues rose 35%. 1.02 was the expectations, 1.06 lakh crore is the actual number. EBITDA 13,114, the expectation was 12,352, so much higher than estimated EBITDA. On that base of 12%, 12.4% is a decent outcome on the margins as well. Net profit 5408 versus 1,000 crore loss. The estimates were 3558 crore profit, so beaten on that front too. More importantly, the con takeaway is extremely strong. There's a firmer commitment towards EV by JLR with accelerated investment plan of 15 billion pounds over the next 5 years, a healthy free cash flow generation target of 2 billion pounds, and net debt reduction to less than a billion by about FY24 end expected per se, and the intent to go auto net debt free, most likely in FY25, through healthy CFO generation and sale of non-core assets, which is also something that will please the street. Stake sale in Tata Tech, which is much spoken about. So decent outing there by Tata Motors. Almost everybody has raised target prices. Jeffries, I know, has raised the target price to about 655. So that is interesting. CLSA, for example, says, let me try and see what their stock price recommendation is, but the clear intention to go net debt free is something that they are seeing as well. They increased the target price to 544 from 624, and they maintain their buy rating. So that's the CLSA view on Tata Motors. I think I also probably have a JP Morgan view. Yes, I do. They are neutral, but they've increased their target price to 455 from 415. A bit more sedate is JP Morgan. Nomura, target price increased to 610 from 508. That's a steep one as well. And I think everything else as well. Goldman Sachs too has raised target price to about 600 rupees. So almost everybody consensus has raised the target prices on Tata Motors. Do watch out for this one from a large cap arena. This is one stock to watch for the day. On the gaining side, the other one to watch for the day on the gaining side is HPCL. Strong numbers and some very interesting announcements. First, the numbers. Revenues up 10%, 1.08 lakh crores. EBITDA up 82% at 5,000 crores. The estimates were 4,000 crores. EBITDA margin 4.75, estimates for 4,000, 4%, excuse me. Net profit at 3,608 crores. I mean, the Bloomberg estimate, I don't know what we're thinking, but be that as it may, just look at the revenues and the EBITDA numbers, and they tell you a story about how well has HPCL beaten the estimates. Now, more importantly, the other business decisions of HPCL, those are stellar as well. HPCL is going to incorporate a subsidiary for consolidation of all green and emerging business opportunities under one umbrella. So that is interesting. They've also considered the roadmap for unlocking value in the lubricant business, including carving out that business too. So clearly, there is some bit of focus on value unlocking at HPCL's end. The fact that crude prices have come off for 4 days on a trot also aid the sentiment around HPCL. Don't be surprised if this is that one large cap name that really becomes the stock of the morning today, at least amongst the very large caps, is the stocks with a fairly larger market cap as opposed to a Naveen floating, etc., which I'm coming to. Then a couple of larger names on the losing side as well, very likely. Avenue Supermarts, revenues up 20%, which is good, but gross margins down 93 basis points. PAT up just about 8.3%. And while store additions were healthy at about 18 and 40 for Q4 and FY23, the fact that the PAT was down 21% quarter on quarter, a bunch of other metrics didn't turn out as well, is all an issue. Remember, it's been a flat stock for the last so many years, so many quarters. As the plate suggested as well, since August 2021, Avenue Supermarts is at the same price. Just the time correction that has happened in this one is quite staggering for all the business greatness that it has, and it does, by the way. I love the fact that we have a homegrown retail chain which is doing so remarkably well in the face of all the online onslaught. But you have to admit that the valuations are steep and the performance not quite there even in Q4. So a bit of a disappointment, if you will. A bit of a disappointment for ColgatePalmolive as well. You could argue that actually reported numbers are better, because if you look at and forget the revenue numbers, they are at same levels, and frankly the volumes have been a bit of a disappointment relative to estimates. But the EBITDA numbers are okay. EBITDA margin numbers much ahead of estimates. Net profit slightly ahead of estimates. So on all those counts, it's done okay. But did you know that as a result of what they've done in FY23, the sales, EBITDA, and PAT CAGR for ColgatePalmolive for the 5-year period ending FY23 stood at just about a 4.5% number on the sales front, or an EBITDA CAGR of just 6.8% for 5 years on a trot. It's hardly done that. The stock is up just 3% since 11th November 2019. For 42 straight months, ColgatePalmolive price has gone nowhere. And the volume numbers were a bit of a disappointment. So maybe the stock reacts a bit negatively, but the EBITDA numbers are positive. Who knows? That might do the trick on the positive side. So let's wait and watch. Not the best of quarter, you have to admit. And then one that did, the 2 stocks or 3 stocks that did really well, actually, I'm including a large cap here, which is DLF. Fabulous numbers. I mean, yes, the revenues were down 5.89%, but you don't quite look at revenues all the time in these real estate companies these days. Actually, you don't look at a lot of these metrics, but for pre-sales and net debt, etc., which I'm coming to. But the reported net profit number was okay, so that's actually a good sign. The net debt reduced to about 720 crores from 2090 crores quarter on quarter. Operating cash flow up 45%. Normalized pre-sales guidance is at 11,000 to 12,000 crores versus 8,000 crores previously. Fabulous show that the confidence that the company has. And as opposed to a lot of global brokerages, I thought DART did a good job of analyzing what DLF has done, and therefore I thought I should bring their analysis here. They're saying it's a play on near REIT ready 40 million square feet of prime operating annuity assets. The valuations are attractive, with the DevCo trading at 30% discount to March 24 NAV and 12% normalized EV EBITDA on FY25 pre-sales. They've taken the 3-year moving average, which is fine. And the only hitch to DLF's prospects is a deteriorating macro outlook, which might impact the overall property demand, and which is a key risk. And I completely agree with that. But leave that. If you're constructive on real estate, you'd find it very difficult to ignore DLF, to be honest. Fabulous show there in Q4. Large boy is doing well, should be taken note of if you are constructive real estate. If you're not, and every reason why you shouldn't be as well, because the macro is turning a bit adverse, then leave that up. But amidst all of this weak macro and how spec chem stocks haven't done anything, Naveen Fluorine comes out and delivers a bumper quarter. Revenues up 70%. 70% YOY. Gross margins 741 basis points higher. EBITDA margins 589 basis points higher. PAT up 81% at 136 crores. Try and find me a fault with Naveen Fluorine. Really, I tried and I couldn't. So extremely strong showing. It was, as Kotak Securities says, it's a strong finish to a successful year, well ahead of street estimates. You could argue discounted on the valuations. Yes, they are saying in the past 1 month there's been a bit of a run-up, but the outlook remains strong. Companies focus on innovator customers, insulating it from the headwinds in the off-patent agrochemical market and the broader economy. I mean, blew out results, really. There is no reason for the stock to not do well. That's the limited point I'm trying to make with the kind of numbers that they've given. Naveen has gained a little bit in the last 15, 20 days or 30 days, but the numbers justify that. I'm looking at it the positive way, actually. Then Texmac or Rail, for a stock that has not done even remotely as well as Titagarh, the numbers were okay. Revenues up 87%, EBITDA margin 7%, PAT up to 36%. Decent quarter from Texmaco. Very decent quarter from VST Tillers as well. Revenues up 48%, EBITDA margin at 17% versus 14%, PAT up 82%. I think they've guided to upping the revenue from a current 1,000 crores or thereabouts to about 3,000 crores in 4 years. Very tall targets. In an interview given to us earlier this year, I think the management spoke about how the tillers market will help them achieve these numbers. April wasn't the best of numbers for them. I think the April data was a bit disconcerting, but it'll be important to understand from the management maybe tomorrow or today or whenever they come and talk to us about what is their confidence level when it comes to the delivery of these numbers. If they deliver these numbers, really, trebling of the revenues from 1,000 to 3,000 in 4 years, it's a spectacular showing. I think most people would be impressed. Let's wait and watch if they do. AMI Organics did well while Lakshmi Organic did not. So AMI, revenues up 30%, EBITDA margins expand 400 basis points, PAT up 28%. Another company, not in line with Naveen, but a chemical company which has done well. So that did well, but Lakshmi did not. Revenues down 17%, EBITDA margins corrected, PAT down 64%. So a bit of a bummer, really. APL Apollo, the numbers were okay, but I think the outlook was important. That's why I'm bringing that to you. The company expects the value-added products to contribute to 60% of sales mix in FY24. And once the 5 million ton capacity plant is commissioned, the value-added products contribution could likely increase to 75%. That's margin accretive for the company, and they need margin accretion simply because relative to what they did in FY21 and 22, FY23 margins were a bit of a bummer, even if revenues went up. So the numbers came out post-market hours. You could argue that the quarter wasn't the best, and maybe there's a bit of a negative reaction there, but the outlook is very promising, and that might actually please the street. So it's an expensive stock, mind you, but it's delivering, and therefore maybe the street might like it. I per se thought that the Q4 numbers were a bit of a disappointment, and maybe the stock should see a bit of a corrective move there, especially in the margin front. Now the stocks in news. It's 16 minutes already, but a bunch of stocks in news. Actually, just two. I'm just mentioning two, and the Adani Group stocks. Standard disclaimer actually. Okay, let's do this and then do the disclaimer, no problem. Adani Enterprises is going to raise, has said that they want to raise 12,500 crores via QIP. They took the enabling resolution on Saturday. And then the other Adani Group stocks, Total Gas, Transmission and Green Energy, they will move out of the ASM framework from today. And Adani Transmission also has announced the intent for a QIP of 8,500 crores. Now, if these companies are able to conclude a successful QIP, then that might actually help soothe a lot of frayed nerves around these businesses. Now, can they do it is the question. Time will tell. Standard disclaimer, Adani Enterprises, through its subsidiary Adani Media Networks, owns 49% stake in Quintillion Business Media, which is the owner of BQ Prime, on which you're watching this broadcast. That's an end to a very long trade setup. Before we wrap up, though, as I said, I will tell you something about the debt ceiling. So I know it's a long trade setup, but you should know this because it's important. So Nomura has written a note in which they say that while the US stocks have been fairly sanguine to the US debt ceiling risk thus far, the 2011 credit rating downgrade episode suggests the risk of a sudden repricing in risk assets. So they say that back in 2011, based on the dates that they have figured out, the S&P 500 hit an interim high point and then corrected quite strongly. S&P 500 plunged 17% in 2 weeks preceding the debt ceiling conversation. Now, Nomura is saying that the US stocks are sanguine thus far, but if there's a sudden repricing, and usually in the past it has been seen that there's a sudden repricing, and if that were to happen, obviously the other Asian stocks also will react negatively, if you will. So you have to keep that in mind, viewers, that there's a few headwinds around us, and we got to take note of that. So keep that in mind. A bunch of very interesting conversations, of course, lined up today. So we try and think about the Karnataka election verdict with Amisha Vora and Mihir Vora, both of them. Amisha Vora at 8:45, Mihir Vora comes in at 10. Talking point with Tahir Badshah, very important at 9:30. Again, try and assess about all of these things. Alpha Strategist with Motilal Oswal's Ashish Shankar and Nitin Shanbag, and some other normal conversations around stocks to watch is something that you got to tune in for as well. Thanks so much for tuning in to this very long trade setup today.